Good afternoon. You're with us here on Midcap Radar on CNBC-TV18, live from the Motilal Oswal studios. I am Hormus Fatakia, and with me is Vivek Iyer. Vivek, good afternoon. It's a bit of a recovery that we are seeing from the lows, particularly in the broader markets, but the bulls will be feverishly hoping that this recovery sustains.
And the bulls will be hoping that in the next 2 hours of the trading session that we have left, we manage to end with some amount of green. We've had so many consecutive sessions of cuts that we've seen as far as the markets are concerned. But we have quite a lot lined up on the show. Let's start off with the top headlines. Market recovers from the day's low, with the Nifty now just breaking out in the green. Mid-cap index too recovers from lows. Oil and gas along with PSU banks are weak. IT and consumer durables lead.
TVS Motors has surged after the total sales in February beat street expectations. Two-wheeler sales were up 10%. Electric vehicle sales were up 34% from last year.
Dalmia Bharat in focus after the company looks to expand its footprint in the southern and western Maharashtra and looks to add 6 million tons per annum cement capacity. The company says strategic investment of approximately 3,520 crore rupees will be funded via debt as well as internal accruals.
Ola Electric is under pressure after reports suggest that the company is laying off over 1,000 employees. This is reportedly the second round of layoffs within 5 months.
Well, you're watching Midcap Radar on CNBC TV18. Once again, it's a session which is marred and marked by significant amount of volatility. In the last hour, you did see a significant amount of recovery coming in. But if you now look at the mid-cap as the small cap index now is again down 1%. So significant volatility, and the advanced decline ratio, despite the recovery, continues to favor that of the declines. But Vamakshi is standing by the wall. She has all the stocks in the broader end of the market that are making all the moves.
Well, absolutely, Vivek, a volatile day of trading today. Let me first look at some of the stocks that are seeing some big moves, but on the downside. That includes names like fertilizer and chemicals Travancore. That stock is down nearly 8%. Welspun Corp is another counter that has not seen a recovery as of today. It's down nearly 8%. Jubilant Ingravia as well, trying to recover a bit, but up and down nearly 6.6%. And Suven Pharma trading close to the day's lowest points, down nearly 7%. On the other hand, we also have PSU banks that continue to be under pressure. Punjab and Sindh Bank is down nearly 5%. We also have names like UCO Bank, Central Bank of India, as well as Bank of Maharashtra. All of these counters are trading with cuts of over 4%. Capital market plays continue to remain under pressure with the correction underway. We also have Angel One down and out nearly 7% today. Nuvama Wealth Management also down nearly 4%. BSC, on the back of a note that came in from Goldman Sachs, the stock is under pressure, down nearly 5%, and 5paisa too is seeing significant pressure, down nearly 4%. On the flip side, in such an overall weak market, we do have some counters which are standing out. That includes Blue Star. That stock is up nearly 6%. Narayana Hrudaya also trading close to the day's highest point, up nearly 6.5%. Avanti Feeds too up nearly 4.6%, and Welspun Living up nearly 4.5%.
All right, Vamakshi, thanks a lot for joining in and sharing with us some of the top movers there from the broader markets. Let's also welcome Ruchit Jain of Motilal Oswal Financial Services for a quick chart check. Ruchit, good afternoon. Thank you for joining in. There has been some recovery from the lows, right? But can this recovery sustain, and how important is that 22,000 level now on the index on the downside? Also couple this up with your stock recommendations as well for the afternoon.
Yeah, hi, very good afternoon to both of you. Well, certainly, there is no doubt about the trend that the broader trend still remains negative, especially in the broader markets in the mid cap and the small cap segment, where we have not seen any recovery since last many days. But on the benchmark index front, the RSI setups or the momentum readings are a bit in the oversold zone. And if you look at historical data, then the index has a good support somewhere in the range of 22,000 to 21,800. So we are already quite close to that support zone. And when the momentum readings are oversold, generally, this should lead to some kind of pullback move in the near term. So yes, 22,000, but I would take it as an entire range of 200 points of 22,000 and 21,800, which should act as a support for the markets. And if not a trend reversal, then at least some pullback move to relieve the oversold setups could be seen in the short term. So we are not recommending any creating fresh shorts at current levels. Maybe it's a sell-on rise market, but at current levels, I think some oversold counters or relative outperforming counters would be seen not to buy for a short-term perspective. And in line with that, one of my recommendation for fresh buy is BEL Bharat Electronics, where we can see that the stock has stopped forming that lower top, lower bottom formation, and is also consolidating around its previous swing low supports. So here the downside seems to be quite limited. The RSI is also showing signs of a pullback move, price up move today supported by good volumes. So BEL can be bought at current levels with stop loss below 245 for a pullback towards 275 to 280.
Thank you so much, Ruchit, for joining in, giving us a view on the markets as well as your individual stock pick. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back to Midcap Radar. Well, the recovery that we're seeing in the broader end of the markets has now picked up further pace. Select stocks that are now trading near the day's highest point include names like United Spirits. That stock is now up almost 2.5%. Quite a few stocks from the pharma index, the healthcare space, that saw significant selling pressure in the last 2 weeks, have now bounced back. Look at names like Divi's Labs, Natco Pharma. Remember, that particular stock saw significant selling pressure, and that stock too has recovered quite sharply today. A couple of stocks from the broader end of the markets that are doing quite well. Have a look at a name like TI Industries, that is Tube India. That particular stock doing significantly well. Vedanta, another stock trading near the day's highest point. The entire mid-cap IT space, that's another pocket of the market that has seen quite a bit of recovery. But two stocks that is on Hormaz's radar are REC and PFC. These stocks too saw significant selling pressure, but today are doing quite well and holding on to the gains while that's Hormaz.
Interesting note that is coming from CLSA. They came out with a note on both of these names on Friday as well, and today they have added both of these names to their high conviction outperform list in this list that includes names like Zomato and Indus Towers as well. Now for PFC, they have upgraded it to an high conviction outperform, but they have cut their price target down to 525 from 540. It is saying that this existing pipeline of undisbursed sanctions that will support double-digit growth for PFC going forward. And this ghost of the bad loans that they have had in the past is almost behind the company now, and the disbursal outlook as well is better for PFC going forward. Calling it the best delivery on loan growth, ROEs, and a healthy dividend yield along with attractive valuations is what has prompted this upgrade from CLSA on PFC. Now for REC, they also say the same thing. They have also cut their price target to 525. That is from 590, and this 55% undisbursed sanctions are already signaling a double-digit growth for the stock. And REC has not seen any slippage in the last 3 years, and this outlook on new disbursals is also good, and it also calls the best-in-class delivery for REC, and a strong senior management track record is what is prompting this upgrade. So price target cuts coming in for both REC, PFC. Interestingly, 12 analysts have coverage on both of these names, and all of them have a buy recommendation on the stock. The high flyers, the best performing stocks on the PSU index in 2023, they had a fairly average year of 2024. They're doing well for themselves in what has been an otherwise very choppy market.
Thank you so much, Hormaz. Another key trigger for these stocks will be a further resolution as far as stressed assets are concerned. One asset is KSK Mahanadi. If that comes in through Q4 or Q4 FY25 or Q1 FY26, they could see some write-backs coming in there as well. But the other stock in focus is an exchange, and that is the Bombay Stock Exchange. This particular stock has been under significant pressure, and today Goldman Sachs has slashed the target price on the back of regulatory concerns. Vamakshi is here with more details.
Well, absolutely, Vivek. Goldman Sachs has maintained its neutral call on BSE, but gone ahead and slashed the company's target price to 4,880 rupees per share. Keep in mind that post-market hours on Feb 24th, SEBI published a consultation paper. This was to bring down volatility in the derivatives market. Now, Goldman Sachs believes that this does not bode well for an exchange where option trading account for nearly half of their top line. They also say that industry volumes, both in case of cash as well as options, have been a bit softer as compared to the forecast for the month of February. As far as BSE is concerned, its cash ADT, that is the average daily turnover share, was also lower than expected. Now, given these factors, they've gone ahead and cut the EPS estimates. For FY25, they've gone ahead and cut it by 1%. For FY26, it is much more significant at nearly 14%. For FY27, it is at 12%. And for FY28, they've gone ahead and cut the estimates by 11%. They believe that the industry volume cuts largely outweigh the higher option market share changes that BSE has been getting in its favor. They also highlight that the share has corrected over 16% in the last 2 trading sessions. They believe that largely the stock price is pricing in risk to the industry volumes from implementation of the proposed rules, but the final outcome still remains quite uncertain in their opinion, and they believe that the consultation paper that was posted by SEBI was not largely anticipated by the market. So overall, when we look at the note that came in from Goldman Sachs, they're sounding quite cautious on BSE. They've gone ahead and cut the target price, and resultantly, the stock is under pressure today.
28% down now from its peak is BSE. The peak was somewhere around 6,100 for the stock, now currently trading at the lowest point of the day at 4,400 is BSE. Vamakshi, thanks a lot for that. A couple of stocks that are bucking the trend though in today's session. We've spoken enough and more about the losers in today's session. Vivek just mentioned some of them that are trading at the highest point of the day. One of them is Blue Star, the one that the early onset of summer is showing up on all of these names. Blue Star is up almost 6%, and Voltas, which had opened higher and had given up the gains, has also recovered from the lows as well. That too now is at the highest point of the day, 4.5% higher there on Voltas as well. While we feel the heat, well, these guys, the shares,
it's a sweltering summer.
It's a sweltering summer indeed, but these shares are doing well for themselves as well. Trend 2 at the highest point of the day, now nearly 3% higher. We take a short break. More on the markets on the other side. Stay tuned.
Gross NPA of the lenders increased by more than 32% in H2 FY24 versus H1 FY24. This compares to a decline of 32.5% in H2 FY23 when compared to H1 FY23. We had highlighted in May of 2024 that rural market has come under stress. Q1 FY25 showed further deterioration in their asset quality. So from May of 2024 to now, most of the lenders have given negative returns versus positive return that you are seeing on Nifty.
But on to our series of year-enders, and we are putting the spotlight today on the microfinance sector, and it witnessed pain in this year, and that is expected to continue in 2025 as well. Welcome back. It's a very, very choppy trading session, but the question that is being asked the most nowadays is, are we at the bottom or close to the sell-off ending? Well, that is exactly the question we posed to our market editor for the day, Ramdev Agrawal of Motilal Oswal Financial Services, and here is what he had to say.
Earnings profile is slowed down, but it is not broken. I mean, last year, the current year, the earnings are going to grow at about 5-6%. And there is obvious reason for credit slowdown, economic slowdown. Every aspect of tightening by the regulators have happened. And now, and there was the election, so there's a delay in the government expenditure and all. So all of this have passed. I mean, this is the year of actually all kinds of difficulties, I would say, in economy. So I think we have set the mood. One, correction is done. The P multiple, which was at 23, 24, that has come down to less than 20. And it is at below 10 years average. So I think it is painful, I understand. It is painful to me also. But it is very, very logical. I mean, it's a proper, healthy correction. I think the divergence between mid and small is too high. Let's see how the market does. Maybe mid will keep correcting and large will make a move, or large will make a move but mid will stay there, and then it will catch up. So market does its own stuff. I think most important thing is now, don't wait for because we are closer to the bottom. Now, whether it is 1,000 points away, 500 points, I have no idea. And let me tell you, nobody has any idea. Now this is a time stocks are making bottoms. All the stocks will not make bottoms on the same day. Okay. So if you like certain stock, and that stock is available at your dreamy price, and it has gone below that, don't hesitate, start moving into the market.
Well, some very interesting views coming in there from our resident editor for the day. But have a look at the kind of recovery that we're seeing, especially as far as the broader end of the markets are concerned. Let's focus on the mid-cap IT pack today. The mid-cap IT pack is the one that's recovered quite sharply. Have a look at names like Wipro. Have a look at LTI Mindtree. That stock was up almost 4% intraday. That's a very sharp recovery. Even names like Emphasis, TCS. Remember, Kotak Institutional Equities today has upgraded two stocks, both Tech Mahindra as well as TCS. So those stocks too have recovered quite smartly from the day's lowest point. Some of the other stocks that are doing quite well, stocks that have seen significant selling pressure over the last few peaks. Look at a name like Indian Hotels. That stock is now at the day's highest point. Max Healthcare, Bharat Electronics. Remember, defense stocks were some of the names that actually saw the most amount of selling pressure. And today, Bharat Electronics is up almost 5%. So that's a very sharp recovery that we're seeing in the broader end of the markets. But overall, the benchline indices, the Nifty small cap index, the Nifty mid cap index, the Nifty bank, all of them continue to trade with cuts. And one stock that Vamakshi just spoke to us in depth about, that is the stock that is taking it on the chin the most, BSE as well as MCX. And even other capital market related themes, names like Angel One, some of the other names too. These are the stocks that have seen significant amount of price erosion over the last few trading sessions, Hormaz.
Angel One also at one point fell below that 2,000 mark. So that is a 50% correction from its peak, which was around about 4,000 rupees. So it's a very steep fall that Angel One has seen compared to some of the other capital market names, be it CDSL or CAMS for that matter. Both the CDSL though is outperforming in today's trading session. But with that, we call time on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. Your stocks for the next 30 minutes.